Joining us now is the big bull himself, Rakesh Jhunjhunwala. Mr. Jhunjhunwala, always a pleasure. Thanks very much for joining us here on CNBC TV 18. The big headlines coming in from the budget, of course, the biggest one is as far as private capex is concerned. But let me get you to tell us what you liked about Budget 2022.
First of all, I would like to point out, Shireen, that is ultra-conservative estimates of tax collections. Ultra conservative. Because the net tax revenue to the center, which you can see on this figure, is extracted from the official site of the Finance Ministry. The tax revenues to the center are about 13 lakhs, up to December is about 14,73,000 crores. And the estimate for the full year is 17,65,000. And the net tax revenue to the center in December was 3,75,000 crores. And the addition they have taken for the next 3 months is only 2,90,000. I can bet that the net tax revenue of the government in the current fiscal will be 3 to 4 lakh crores. 3 to 4 lakh crores higher than the budget estimates. The fiscal deficit will be at least 1.5% lower than what is being projected in the budget estimate. And similarly for next year, if this year the collection is higher by 3.5 lakh crores, then next year the collection will be higher by 4 lakh crores. So I think this is the conservatism of the highest level, and all the concern about borrowing in the bond market will be addressed. We just have to wait until March. And when the January tax collections come in, this will become very apparent. Because I think in January itself we will meet the budget estimates, revised budget estimates. That's an important point I want to make. Second thing, I think, I'm not looking at the point of view of 1 year expense. I think we are missing the trees for the woods. What is this reflecting is a permanent growth in the tax to GDP ratio. And, the improvement that the government is trying to make in the tax laws and the administration in the last 7 years is now coming to fruit. And this increase in tax to GDP is going to help us in years to come. Second thing I feel, third thing, that we are projecting 8.5% nominal GDP growth. It may be 8%, but as a country we are planning for 10%. We have the courage to say we will grow 10%. And a lot of the reforms, especially the PLI, the ease of doing business, has come in to reflect the China factor. And we have a credit cycle which is past us and a capex cycle which is ahead of us. And the world wants to invest in India. So I remain extremely bullish, Irene, as usual. I think markets will do well, and more than that, the country will do well. We're going to have growth with good social welfare.
That's a very important point that you make, Rakesh Jhunjhunwala, and we will try and get the budget team to explain to us why, in your words, they've been so ultra conservative as far as their tax assumptions are concerned, but we will try and get them to explain that to us. But on some of the themes that the budget has taken forward, and you talked about PLI, for instance, there seems to be a very concerted attempt at ensuring that the PLI schemes that were announced are executed and operationalized, and wherever needed. For instance, there was a further announcement today of 19,500 crore rupees as far as the solar module PLI is concerned, to push green and clean energy. So sustainable and equitable growth in the long term seems to be something that the government is working towards. On that aspect, from the short to medium term, what do you believe the government is going to be able to do to stimulate demand, consumption and recovery, while in the long term, as you've pointed out, it puts places the pieces up nicely?
Stimulation of demand. And see, the government, in spite of elections, has not done any populist measures, has not made any increase in welfare expenditure which is uncalled for, right? So, that scores mark. Remember one thing, Shireen, what's most important in India is a fair and well-regulated tax regime and ease of doing business. When that is there, India is going to just boom. And we have the credit cycle which is past us. And no country does a credit cycle, generally happen without a 8 to 10% year gap. And second thing is we have a capex cycle ahead of us. You see what Mr. Kumar Mangalam Birla is saying, what all the industries are saying, what is Mr. Anil Agarwal saying, what is Reliance saying. The private sector is ready to invest and invest heavily. So, ma'am, I think we are very well placed. I'm lucky to be an investor at this time, and I'm bullish, ma'am.
Well, that's the second time you've said that. That's a very bullish Rakesh Jhunjhunwala, saying that he likes what he's heard today. And to the point that you were making about the government wanting to crowd in private investment, that was what the finance minister spoke of as well when they decided to up the allocation for capex by almost 35%. But Rakesh Jhunjhunwala, on the strategic disinvestment front, because what we have seen is that the government has cut its target for this year, and it's also kept a fairly conservative target, conservative in the context of what we've seen the government lay out in the previous years at 65,000 crores. Do you believe that that is also going to be something that they will better and better quite significantly?
I don't know about the strategic disinvestment, whether it'll get 65,000, but I know one thing, that the tax revenue collections are going to go through the roof. And the budget deficit this year is at least going to be 1.5% lower than what she has estimated. Until the expenditure increases. Simple, you have collected 13,75,000 crores up to November, up to December. Net tax revenue to the center. I'm showing you the site I've extracted from the official site of the Ministry of Finance. Right, and they've taken 17,65,000 as a tax collection. I think it will be at least 3 to 4 lakhs extra.
Yes, that point you've made. But what does this now mean as far as where the markets are positioned, Rakesh, especially in the context of what is happening globally and in light of what the government has now laid out very clearly as the blueprint for growth?
Ma'am, I can tell you, I think in the last 6 months, or last 7 months, FIs have sold 1,37,000 crores. And market is less than 10% below its all-time high. What else can I tell you? Right. And people say, they opened 8 crore demat accounts. What about the balance 80 crores? I always like to see a glass full.
Okay.
And I think there is, India, I'm again on the reputation, India on the verge of big change.
Big change, you would say that in that case, go all in on the domestic economy facing stocks. For last 2 or 3 years, it's been all about IT. But now of late, started to see banks pick up, autos pick up. Cement has been doing well.
Why invest? I'm not going to advise you where to invest. I'm not an investment advisor. You invest where you think, but I think public sector banks are going to do really well. And the valuations even today are ridiculous.
From a sectoral standpoint, there was a lot of thrust in this budget, whether it was infrastructure, whether it was a big surge in capex, a lot of focus on renewable energy, electric vehicles, hybrid vehicles, etc. Anything that stands out for you from a long-term investor standpoint?
You are excited by the fact that government is going to increase capital expenditure. I feel the increase of capital expenditure by the private sector is going to exceed the government's expenditure. तो बोलते हैं ना सोने पे सुहागा है. Mr. Kumar Mangalam Birla is saying, Mr. Anil Agarwal is saying, Mr. Mukesh Ambani is saying, Mr. Adani is saying, all industry are saying they're going to invest big time. And madam, you're underestimating, I think, tax revenue estimates for the current year at least 3.5–4 lakh crores would be more than what they have estimated.
Yeah, that is something that you have expressed, and many have suggested that perhaps we could see a beat on that front. But let me address the issue of what the theme seems to be, and I think that is something that you spoke about as well. I think Amitabh Kant put it very well in his conversation with me. He said that this is an attempt to move away from sunset sectors to sunrise sectors. Would you agree with that?
Ma'am, what you buy is very important, and what valuation you buy is more important. So I don't see sunset and I don't see sunrise. I'm not going to buy any sunrise at any price. And not that I will not buy sunset at a price. And I don't know what you mean by sunrise and sunset. Are banks going to go out of fashion? Are metals going to go out of fashion? Can you create metals on the internet? So I don't look at sunrise and sunset. because the sunrise are all ridiculously valued. And don't forget that ultimately, price is a slave of earnings. That is, if there is one truth in the stock market worldwide, stock prices ultimately are slave of earnings and cash flow.
So you believe that what we are seeing as far as the startup valuations are concerned are not bordering but are already irrationally exuberant?
Well, I reserve my comments. Just like crypto, I stood out. I don't want to go to every party in town. I don't want to go to the startup party. See, the hangover is only after 2 days.
Right. There was an interesting provision in the budget to tax cryptocurrencies. I wonder if you spotted that, Rakesh Jhunjhunwala.
I think what government wants to do is that it wants RBI to promote a digital currency and kill all other currencies, just like China is doing, which is the right approach also, in my opinion.
Yes, the government has made it clear that there will be the introduction of a digital rupee by the Reserve Bank, and with that tax that's been brought in on cryptocurrencies, on NFTs, a 30% tax, a 1% TDS, the government making it clear that irrespective of whether a bill is moved in Parliament or not, this is now very clearly under the tax net. Rakesh Jhunjhunwala, there was a lot of sectors, a lot of themes that were addressed, of course, in the overarching pillars of growth that the government intends to focus on, not just in the next year, but over the next 25 years. What appeals to you the most in terms of the thrust and focus areas from what you have heard so far?
I think ease of doing business, privatization, right? A good and fair tax regime, a cutting of the bureaucracy's clips. I think all this India will grow for decades. See, all this improvement is a process. It's not a journey. It's a journey, there is no destination.
It is a journey, and it promises to be a very exciting journey. Rakesh Jhunjhunwala, thanks very much for joining us here. I know you don't comment on the budget. This is the first time that you have decided to come on Budget Day and express and share your thoughts on what you make of the budget, and more importantly, the implications that it has for the economy. So we do appreciate the fact that you have decided to join us today on CNBC TV 18. Any final comments before I let you go?
Yeah, I think it's my request and my observation that believe in India, be optimistic, we are getting there.